Hello and a warm welcome. You've joined us here on ET Now. You're watching All About Your Company. I'm Ashesha Atwaryu, and today on the show, we are going to put the spotlight on Nucleus software. Remember, the stock of this company has tanked nearly 19% on a year-to-date basis. But what led to that, and what's the outlook going forward? That is the focus point of this show, and we'll also touch base to the management of the company in just a bit. But first up, let's take you through the key talking points and the key discussion points that we will have with the management of the company. Now remember, the order book of the company has shot up to nearly 1,000 crores as on the 31st of March 2026. So what is the revenue conversion timeline looking like? Remember, analysts are concerned about the revenue conversion timeline. We'll talk about that with the management of the company. Other than that, several other concerns around the company. One, of course, is with respect to migration from FinOne, that was their earlier model, now to another software, which is FinOne Neo. So why the reluctance of customers to migrate from the older version to the new version? That will be the second talking point. Any other major client addition conversations that are in last stages will also be another talking point. Remember, the company has said that it is in conversation with several Japanese customers. So what is the progress on that front? That will be another focus point. Shifting focus to cash and bank balance then, which stood at about 972 crores at the end of fourth quarter FY26. What will the utilization strategy be, and how will the proceeds be used? That is another question. Lastly, let's also talk about the financial outlook for the next 3 to 5 years, and what will the revenue look like? What will the margins look like over the next 3 to 5 years, especially after the kind of margin contraction that we have seen in FY26. So these are the 5 broad talking points that we will touch base with the management with. But first, let's talk about the company, and let's discuss briefly about what the company does. So it offers IT and consultancy services. It serves a whole host of sectors within banking itself. So it has several clients, not only in the domestic market, but in the international market as well. It runs lending and transactions for more than 200 banks globally. It was founded in 1986. It is headquartered in Noida, and it is listed on Bombay Stock Exchange for over 30 years. And the market cap of the company stands anywhere between 1,900 to 2,000 crore rupees. Now, as far as customers are concerned, as I mentioned, the company has more than 200 financial institutions as its clients across 30 nations globally. It manages about $15 trillion value worth of transactions per annum. That's the size of the transaction that it manages. It manages 1.2 trillion value of loans globally, and it enables 5 lakh users to log in daily. So that's how the broad scope of business of Nucleus software looks like. Now, it has 2 major products in its software bank. One, of course, is FinOne Neo, and the other is Finaxia, and we'll also talk to the management in detail about this, because FinOne is also transitioning and migrating to FinOne Neo, and whether customers have already done that, and if not, what is leading to the reluctance. We'll talk to the management about that in just a bit. Meanwhile, let's also talk about the geographic mix then. It generates about 60% of its revenue from the domestic market back home in India, and the balance of 40% is generated from export markets globally. Remember, it has presence across several nations. It, of course, has presence in India and Far East. But other than that, Southeast Asia, Europe, West Asia, Africa, Australia, these are some of the other regions where it has geographical presence in the global market. Shifting focus then, as far as customer concentration is concerned, that could be a bit of a concern for investors, because it generates nearly 27% of its revenue from top 5 customers. So is the company looking to diversify beyond the top 5 customers in order to reduce customer concentration? That is also another talking point. Meanwhile, the company has also said that it is expanding global reach by strengthening partnerships with banks globally. It is also accelerating digital transformation. It is investing in innovation, and especially now with the emergence of AI. What will the impact of AI be on company's business model and new order inflows? That will be another question that we will be posing in front of the management. Other than that, as far as strategic growth areas are concerned, the company says that it is working on co-lending solutions. It is developing new products for gold loan platform and loan against securities, or LAS. So these are other product areas that the company is looking to diversify into. Shifting focus to a couple of other parameters that we need to keep an eye out on, and first of course is the revenue metrics. Now remember and look at the kind of growth that it has reported. From about 497 crores of revenue in FY22, it shot up to about 832 crores in FY25, and in FY26 the growth was rather muted, with revenue coming in at about 876%, and the 3-year CAGR stood at about 11%. So the growth has not been robust, but it has been steady and consistent over the last several years. EBITDA CAGR meanwhile has been at -7%, and the reason of course is the decline that we have seen in FY25 and 26. So EBITDA stood at a whopping 220 crores in FY24, but then it declined to 168 crores in the following year, and about 126 crore in FY26, and that clearly weighed heavy on company's margins over the last 2 years. One of the factors, of course, is that the company is investing heavily in hiring new employees. The company is also making additional investments, and that seems to be weighing heavy on company's margins as well as profitability. That's the profitability graph for you. From 128 crores of profit in FY23, it did shoot up to 192 crores in FY24, but since then we've seen a consistent decline, and in FY26 it stood at about 117 odd crores. And as I mentioned, this is on account of higher investments in employees that the company is doing, and this, the company says, is likely to yield into higher revenue and a higher inflows going forward, but let's see how it transpires. As I mentioned, margins have been weaker over the last 2 years. In fact, in FY26, margins fell below that 15% mark. So that has been another concern for the street, and that is exactly why the stock has tanked quite a bit on a year-to-date basis. In fact, if we see the last 6-month trend, margins have declined, and that is exactly why the stock has also taken a beat. Shifting focus to a couple of other balance sheet parameters that you need to keep your eye out on. And remember, the company is a debt-free company. It does not have any long-term borrowings in its books of accounts. Profit and reserves and surplus position has also been very strong at about 881 crores, and the book value has also been strong. Now remember, the company trades at 2 times its book value currently. Borrowings, as I mentioned, have been 0, and the cash and bank balance as on FY26, 31st March FY26, stood at about 123 odd crores. So that's how the cash and bank balance looks like. Shifting focus then to a couple of other parameters then, and let's talk about the conversion of EBITDA to cash flow, and that too has been very strong, at least over the last 3-year period. So if we look at it in FY24, cash flow or conversion as compared to EBITDA stood at a whopping 101%, which was very solid. Then at 90% in FY25, and it shot up again to about 93% in FY26. So that is clearly not a concern. Cash conversion has been very strong for the company over the last several years. Shifting focus then, and we also have to talk about the return metrics, because that has been very strong for the company. It has consistently been over that 15% mark, at least over the last 4 years. In FY23, it stood at 27%, shot up to about 32% in FY24. And 23 and 17% in FY26. Yes, we have seen some bit of decline in FY26, but despite that, it continues to remain above that 15% mark. Let's also talk about the shareholding pattern then. Promoters have consistently been holding 74% stake. In fact, we have seen some bit of increase between 2024 and 2025, but despite that, 74% is strong shareholding for promoters. FIIs have been holding about 5%, DIIs 1%, and general public at about 21%. But promoters have stayed put in the company, and that is another positive. Now, as I mentioned at the start of this show, remember, order book position continues to remain very strong. Order book shot up from about 600 crores at the end of 3rd quarter to about 1,044 crores at the end of 4th quarter. So will this convert into revenue very soon, and as soon as FY27? That is another important talking point. The company also added 7 new logos, 7 new clients in FY26 versus just 3 client additions that we had seen in FY25. So that is another positive for the company, because new client additions means that we will see new order inflows and new revenue generation in FY26 and FY27 and beyond. Now, remember, as far as client relationships are concerned, they did lose one of their big clients, and that is Bajaj Finance. But the management says that this is because Bajaj Finance is investing in one of other companies, and hence it is going to looking. It is also looking to acquire that company's products. Relationship with HDFC Bank continues to remain very strong for the last 30 years. There has been no significant loss of existing customers over the last 3 years. So those are another two very positive points. And remember, the nature of the business is such that once a client is onboarded, it stays put for a long period of time. So revenue generation, once one client is onboarded, continues to remain consistent and recurring. Ongoing discussions with large Japanese banks continue to remain intact, and the company says that it has set up a Vietnamese subsidiary to support expansion in Southeast Asia. So these are another 2 points when it comes to expansion over the next few years. Now, FY26, we did see in the charts that profitability and margins in FY26 were impacted. What were the reasons? Higher employee expense, higher sales and marketing expense, and higher operating investments. The management, of course, believes that all these three expenses are going to result in higher order inflows going forward. So, yes, it was a one-time hit in FY26, but perhaps it will lead to more order inflows going forward. Now, remember, one of the other focus areas has also been migration from legacy FinOne to FinOne Neo. And what is leading to reluctance amongst customers? That is another talking point. And the company says that it is also developing AI-enabled migration tools, especially now with so many developments happening around AI. The company says that it is focusing on this talking point as well. So these are some of the talking points that we will, of course, talk to the management. And the cash balance as on 31st of March stood at about 972 crores. So to discuss this in greater detail, we are now joined by Mr. Vishnu Dusad, co-founder and managing director at Nucleus Software, who is now joining us. Mr. Dusad, good afternoon, and thank you for taking your time out and joining us here on ET Now. And let's start by talking about the order book position itself, because that has seen a rapid uptick. It came at about 1,000 crores at the end of fourth quarter FY26. But the street clearly is concerned about converting the order book into revenue. If you can help us understand the timeline with respect to the order book conversion.
Pleasure to be here on ET Now. And when it comes to converting the order book into revenue is concerned, these are all long-term orders. So the revenue conversion is going to be over 5 to 7 years. So you the investors need to keep this at the back of their mind when looking at um, nuclear software as an investment option.
Okay, so the revenue conversion is likely to happen only over a period of time, that is 5 to 7 years, and it is not likely to happen at least in the very near term. But how much of this 1,000 crore order book is from existing customers and how much is from new clients?
I may not be able to give you exact numbers, but most of it is very high percentage of it is from existing customers, and a smaller percentage is from new customers.
Okay, so smaller percentage of this order book of 1,000 crores is from new customers. We get that point. Another point which the street probably is concerned about is migration from FinOne to FinOne Neo. If you can give some more numbers to it, how many clients have already converted and how many others are in the process of converting?
As of now, at least 5 customers are in the process of moving from FinOne to FinOne Neo, and once these 5 have completed, we visualize a very substantially higher number of customers moving from FinOne to FinOne Neo, and over next 3 to 5 years, we visualize that all our customers would have moved from FinOne to FinOne Neo.
And any big customer that has probably been reluctant in migrating to this newer version of your software?
We did have some challenge, some 5 years back in terms of um, our migration not happening at the pace that it ought to have, and hence there was hesitation on part of some of our customers. but slowly we are visualizing that hesitation is getting over.
Okay, so you're telling us that yes, there was some reluctance, but most of the problems are now behind us, and all customers will gradually transition and migrate from the older version to the newer version, right? There is no loss of client on account of this migration. Am I getting you right?
You are absolutely right. There is no loss whatsoever. Our customers continue to be confident, extremely confident about our old solution, and equally confident about new solution. It was the migration and user training, those kind of challenges which we are overcoming, and we are now absolutely confident that all our customers would move to our new platform, which adds substantial value to their business. Wherever we have seen these migrations happening, our customers have realized humongous amount of value coming out of those migrations.
Okay, so there have been no concerns with respect to loss of customers on account of this migration. That's the word coming in. I believe you're also talking to a whole host of Japanese clients. If you can take us through the progress on that front, what is the probability of new client additions from the Japanese market?
Japan is a very unique market in the sense that once you get associated with a customer, it will be for all practical purposes for the lifetime. So we have been talking to, and we have been in that market for now more than a quarter century, and we have been talking to some of the big names in the Japanese banking industry, and the conversations are on. The other important aspect about Japanese market is it takes a reasonable amount of time. In fact, I would say more than reasonable amount of time to win a new customer there. So we are at it. We have been at it for some time, and our conversations are on, and we are very confident that this will result in a meaningful addition from of some of the Japanese banks in our customer list.
Right. Mr. Dusad, I understand that the client conversations could take as much as 2 years to actually translate into new order win. But what is the probability of getting this Japanese client? And are there multiple Japanese banks, or you're just talking about one or two?
No, we are talking to multiple Japanese banks, and there is reasonable probability that we would be able to uh, get them to see the value in our offerings, and be our customers on some of our platforms like Finexia and FinOne Neo.
Okay, so talking to multiple Japanese clients and highly probable that these will get converted. Mr. Dusad, we need to slip into a very short mandatory break, but stay tuned with us. We'll just come back in a minute. Okay, welcome back. You're still tuned into ET Now, and we are in conversation with the management of Nucleus Software. Mr. Dusad, let me come back to you, and let's talk about the performance that you reported in FY26, when margins have contracted below that 15% mark. I do understand that you have invested in hiring new employees, in higher promotion expenses, but when will these translate into additional order wins, and when will margins rebound? Is that likely to happen in this year itself?
I'm not very sure about that, how long it is going to take for the margins to bounce back. But I would certainly want to mention that we are a long-term player, and we would continue to invest in creating and keep on upgrading our intellectual property so that our customers are benefited immensely. And in that context, a quarter or two, or a year or two, margins going down or up, we do not really, um, be disturbed with that. We continue to focus on our investments for the benefit of our customers.
Okay, so will higher expenses and higher promotion and advertising expenses continue in this year itself? Because that means that margins probably will be in that 14 to 15% mark in FY27 as well.
I would not like to confirm it either way. but our investments would continue.
Mr. Dusad, let's also understand the impact of AI on your business, whether in terms of revenue or in terms of cost. I understand that you're also enjoying cost benefit as a result of AI utilization. What is the likely impact on revenue and additional order wins in that case?
It is likely to be reasonable, slowly, but it is going to take time. Our customers are trying to understand the impact of bringing in AI into their business. There are still some certain challenges that are there in terms of hallucinations and so on and so forth. But the conversations with our customers are on, and at the same time, we continue to keep experimenting, using LLMs about how can we add value to our customers, how can we give them a faster turnaround time on their change requests and so on and so forth. So yeah, it is very interesting to see how things are panning out in the AI space, and we are not just tracking them closely, but we have started leveraging those exciting features of AI, and we are confident that we will be able to add even more value to our customers in quarters and years to come.
Okay, so Mr. Dusad, there has been no negative impact so far of AI. Can we conclude it?
No negative impact whatsoever. It is as of now experimentation phase, and the experimentations are showing positive, uh, indications, reasonably positive indications.
Right, okay, so that's as far as the impact of AI is concerned. Let's also understand the new products that you're developing, anything that is in the pipeline. And I also believe that you've said that you're developing AI-enabled migration tools. What are those and how is that likely to result into revenue generation for you?
Yeah, migrations are always, a complex phenomenon, because earlier our implementations were reasonably customer specific. From those customer specific implementations to a generic platform that which is FinOne Neo, it is always a challenging process. To ensure that this challenge is minimized, we are applying artificial intelligence tools to understand what sort of customer specific customizations had happened earlier, and how they would fit into our new framework, which is a common overarching framework, which by the name FinOne Neo. So AI is helping us doing this matching, and that is how we would be able to minimize the timeline for migration from FinOne to FinOne Neo.
Let's also talk about revenue concentration in that case, Mr. Dusad. And I believe you generate about 25 to 30% of your revenue just from top 5 clients. Is that a concern for you? And are you looking to diversify your client portfolio in that case?
I would say it is not a concern, and at the same time, we are obviously continuing to diversify. It is not a concern because we continue to service our existing customers very rigorously, and we rise to the occasion. The financial services space is getting increasingly competitive, and they need to be, very, very competitive in that space. And that is where our sustained focus on R&D and adoption of latest technologies helps them, gives them a confidence that they don't have to look for any other alternative. And that is how it is not a concern for us. And having said that, obviously, adding more customers is continues to be our focus, and that's how slowly this would get reduced the
Okay, so
number
the
of people.
cash balance as on 31st of March stood at about 970 crores. How are you looking to utilize this cash balance?
We will, as we have been maintaining, we will continue to maintain it as a as a something for rainy day. And we, as of now, we do not have any plans to put it to use in terms of acquisitions or things of that kind. We will continue to try and grow organically.
So organic growth will be the main focus area, no inorganic growth, and you will continue to maintain that cash balance of about 980 crores. One last question before we let you go. Mr. Dusad, what will the company look like in terms of revenue and margins 3 or 4 years down the line? FY26 revenue stood at about 880 crores. 3 years down the line, what will the revenue figure look like? If you can help directionally, if you can take us through the numbers.
As a policy, we do not give any guidance, so I would not be able to give you any number. But directionally, we continue to be absolutely confident about our ability to uh, service our existing customers with latest in technology, and we continue to be confident about the margins also over the period, over the next few years period of their bouncing back to the right levels.
So no guidance on the revenue and margin front, but the outlook continues to remain very positive. That's the word coming in. Mr. Dusad, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the outlook for the company will look like over the next 3 to 5 year period. And that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side. Stay tuned.